I frequently get asked if DeFi is going to replace traditional finance, and the answer has to be no. This is definitely worth thinking about, though. It also raises important questions about how technology is redefining financial freedom, particularly for Gen Z and other new investor groups. But fundamentally, DeFi and TradeFi cannot exist separately. Their products may trade differently and behave differently, but they need each other for the financial system to continue to thrive. At the Asia Tech Podcast, we love exploring large macro shifts and breaking them down into real insights so we can better understand the world that's emerging around us. I discussed this with Paul Quickenden, the Chief Commercial Officer at Easy Crypto. Paul's background spans decades in disruptive tech, including his move into blockchain and the crypto space. We dove into topics like the democratization of investments, the challenges of user adoption in crypto, regulatory shifts across global markets, and the pivotal role of digital identity in our future. Paul offers compelling insights into the intersection of financial freedom and technology, and let's welcome Paul to the show now. Before we jump in, let's thank the sponsor of this episode, Dr. Tech. Dr. Tech can help you build your e-commerce store and start selling quickly online and on social media in just a few days. And Dr. Tech stores are gorgeous, modern, and responsive. They are fully customizable and simple to use. Dr. Tech stores have hundreds of included optimizations that will help you sell more online, and a support team that can answer all of your questions. With Dr. Tech, there are no hidden costs, no commissions on sales, no add-ons to buy. Everything is included in one simple subscription. So go to hello.dr.tech/ATP to get a free trial and start building your store. You can find the link in the description below. Also, Dr. Tech is offering a special deal to the listeners of the Asia Tech Podcast. After your free trial, you can get your first full month for only $1. To get this deal, simply type ATP into the live chat, and they will send you a special promo code. Thanks again to Dr. Tech for sponsoring, and now let's get back to the show. What got you into crypto?
A good friend of mine, and I don't know if I've ever stopped to thank him, but yeah, a good friend of mine got me in. I was between jobs, and he was working for a blockchain indices maker. So they were making, before we had ETFs, they were trying to solve that problem. And a sister company was looking for someone to do their consultancy and help businesses launch and do ICOs and all that sort of stuff. That was all part of it back 6 years ago. So that's how I got in. Yeah.
I remember hearing first about it in like 2012, I want to say.
Wow. Yeah.
It's a long time ago. And I'm not a crypto holder, right? So I'm not bragging.
Yeah.
Right? Unfortunately.
Yeah. I think there's a lot of people with those types of stories. I think we all, looking back at the past is brilliant. And we wish we had acted on some of our impulses a little bit earlier.
Yeah, or maybe not for me in my case, maybe not acted on some of my impulses, but we'll leave that for another time.
Yeah.
But a lot of the talk back then was just about the blockchain itself. And to be fair, I didn't really understand it. I mean, now obviously I think we all understand it way better.
Yeah.
But there are two things interplaying here, right? There's a back-end technology thing, and then there's the front-end kind of internet gold thing, if you don't mind me saying.
Yeah.
Yeah.
I think that's fair. Yeah. So blockchain's, kind of a honeypot phenomenon that goes on with banks. Thankfully, we don't have a lot of bank hacks anymore, but when they all launched internet banking, it was quite common.
Yeah.
And people have forgotten that, and technology's got a lot better, but that's life. And so blockchains are decentralized. That means there's lots and lots of copies of the last part of the chain. And to hack them, essentially what that means is you've got to, within the time period between the next block being minted, you've got to break the chain and then convince all the nodes in that network that what has happened previously didn't happen. So that makes them pretty secure, right? That's a wonderful piece of technology that the world can and is adopting. And then the other parts of that is how we're signing things using cryptography and wallets and all that sort of stuff. And particularly now that we live in a world and there's lots of high profile elections going on at the moment. Being able to decipher what's real and what's not, particularly as we edge into an AI world, is going to become an increasing challenging phenomenon. And
I didn't expect to talk about this so much today, but just because you brought up the elections, I was having a conversation with a friend last night about digital money, about Bitcoin, about blockchain, and how the decentralization, like what normally happens. So I was going through this, right? I used to sit on a trading desk. And if a war broke out, if an earthquake happened somewhere, there would be this, what we used to call flight to quality, right? So you would be 100% sure that the Deutschmark or the euro or the yen would get sold and people would just start buying dollars.
Yep.
That just happened every single time. It would revert to the mean for sure at some point. But just to feel like if everything goes upside down, I have US dollars, that's going to be okay. I think it's pretty safe to say that not a lot of people feel that way anymore for whatever reason, without getting into the politics of it. But I feel like that's it's a global phenomenon too. And maybe you can comment if it's not just a now phenomenon, but if it's a generational phenomenon, if that makes sense. Do you know what I mean? Like, is the younger generation changing the way they think about money and investments? And if so, why do you think so?
So I can answer that. So yes, younger people are changing the way they're thinking about money and investments. And so, I'm currently based in New Zealand. We have a tradition of you get wealthy by buying houses. I think it happened in Vancouver, it happened in Australia, and a few other places. And accordingly, the house prices are crazy. And when everyone's saying they're crazy, you just accept they're crazy. And so what we are seeing is that there's this phenomenon where people are dissatisfied with that. Like, they can't get into those markets. Traditional investing hasn't been working for them. Even accessing US equities and that sort of stuff has been a challenge for certain parts of the world. And so they are turning to alternate investments. Crypto is one of them. And obviously that's the part that I play in. But, we're seeing people investing in wine and whiskey and, a whole bunch of other assets that aren't top of mind when you think about that sort of stuff, because the entry price is low. You can spend as low as kind of $50, $100. It's speculative. So but over enough time, everything seems to be in the main assets in crypto are heading up and to the right. So that's a decent story for people to get their head around. And they're seeing it as a way to get to financial freedom in a different path from their mothers and fathers and their grandparents. And so that's certainly going on. In terms of crypto and the dollar, I think there is a weakening of the dollar's standing as the global reserve currency. Crypto is certainly playing a part in that. If you go down certain rabbit holes, you'll see that certain OPEC members are no longer just exclusively accepting the dollar as payment, and that's happened in the last 2 or 3 years.
Yeah.
You've got the BRICS nations evolving, or the SCO nations, depending on which group you're looking at, and they are definitely talking about forming security alliances, but also breaking the hegemony of the US dollar and foreign trading and all that sort of stuff. So and we live in a time where, for recent pandemic events, trust in enterprises and authority isn't quite what it was. And so I think it's a confluence of things coming together, Michael, where all of these things combining, it's just kind of like people aren't as accepting of the status quo as they used to be.
Yeah. I want to make a point. I asked the internet while you were talking what $19,000 in 1970 is in dollars today. And you're probably thinking, why 19? It feels like a really random number. And that's because that's the price my parents paid for their first 4-bedroom house right by the ocean. Actually right by the bay.
Wow.
In Massachusetts. And that would be $153,000 today. You couldn't buy my parents' house today for $153,000. And I think this is what you're talking about. I know in Sydney for sure. I know you're in New Zealand, but I know in Sydney for sure, because I have friends that live there. There's been like a 30-year bull market that's just made like regular people not possible to buy real estate in the same way that they could have 25 or 30 years ago. I think that's a fair statement. Yeah.
Yeah. And, lots of metrics are supporting that. You've got, the metric of your earnings to the value of your house is like 7, 8, 9, 10% times, right? It's crazy. So, and again, and I've got an 18-year-old son. If you're him, you're looking at a housing market with an average price of $1 million. That seems like a very steep thing to get into. So,
yeah.
You have to save for 3 or 4 years to get the deposit, and they, he doesn't have that kind of patience. So he's off to his own kind of thing. So
yeah. And to be fair, at 18 years old, your life is moving way faster today than it was when I was 18, for sure.
Sure.
Anyway,
yeah.
Do you want to talk about some of the research that you guys have done, and then maybe dovetail it with the research that Bank of America has done, because it feels like those two things are in congruence with each other, yeah?
Yeah. So we did a survey of Australian and New Zealand citizens, and Bank of America obviously did their own thing. in America, and the research was really conclusive that adoption in crypto is growing, and people are more interested in it. In both countries, it's getting close to 50% are either in or interested in getting into crypto, which is a big number.
Yeah.
And then the other key theme that I just talked about previously was the younger people in particular are feeling disenfranchised or excluded from certain investment classes, and they're looking at crypto in particular as one of the options to build financial freedom. That's never gone away. People will still want financial freedom. They're just looking at alternate ways of doing that, and crypto is forming a larger part of that answer for a bigger part of the community. And then the last thing that we found in our research is that the user experience for new people coming into cryptocurrency isn't fantastic. And the way I describe it is, it started out with a bunch of security geeks created something, and we've never really recovered from it, right? And so they won't be offended when I tell them that, because the way it works, you get a wallet, you have this 24-word key phrase, you're like, what do I have to do with this? I've got to store that securely. That's kind of the world we're trying to introduce the mass market to. And so there's lots of people, ourselves to include, trying to solve that particular onboarding phenomenon. And that's what we at Easy Crypto are seeing. Bank of America, their research painted a very similar picture. They were looking at a slightly larger cohort. So they were sort of in the 20 to 40 range. But the list of assets that cohort, the younger cohort versus the people like me and my parents are investing in, are very, very different. And again, it's lower entry price, slightly more speculative by risk standards. But they're trying desperately hard to break into or get away from some of the treadmills that they feel like we've been on. And the research again was clear, like housing's down, equities are down, 401s are down, crypto up, other assets are up, right? So.
Yeah. Look, it's also harder to invest. The U.S. stock market's on fire, right? I mean, if you look at the S&P 500, if you look at the New York Stock Exchange indices, right?
Yeah.
They're all on fire, hitting record intraday highs and stuff like that. But it's expensive. Like, do you want to talk at all? Because you talked before about buying wine and buying whiskey and stuff like that. And even some of the good investments in those alternative assets themselves on an individual basis are expensive. But do you want to talk at all about fractionalization and how that makes it a little bit easier for people even to just take part, if that makes sense?
Yeah. Yeah. So look, there's a movement inside of various industries, and it's not just crypto, but they're trying to expose some of these big chunky assets to wider people. And that will serve the market. Let's be very honest. It makes it more available. And the way they're doing it is, instead of forcing you to own one share, one house, one 50,000 bottle of whiskey, they're fractionalizing it, and so that you can share that amongst however many people that you want. Within crypto, people have been doing that with property since probably 2018, 2019. There was a famous hotel in one of their
Aspen,
thank you, who originally did it. And there's even a securities exchange in America that was listing things like that. But real world assets, that's the parlance we use inside of crypto. Like, they're really focusing on getting government bonds tokenized. That'll open up the market to a different group of people. Like I said, whiskey, wine, cars. So, probably nirvana for someone like Uber. But, in New Zealand, we sit here, we've got 2 cars out the house. We have a 2-car family. It gets used a fraction of the time. What would happen if I bought into a company like Uber? I only needed a car. There's a pool of 100 cars. I only needed one when I needed it. It would turn up. It was driverless. That would be a really good story, right, in terms of fractional ownership. But that's really taking Clayton Christensen's disruption to the nth degree. That's like way up there, because suddenly I'm not owning a car. I'm owning a share of a ride service, and my share means I get to ride when a car is available, right? And so, quite a different proposition, and that's kind of the vision around fractionalized ownership. It's just bringing down the barriers to these high profile, high price point items. Paintings even doing it. Like, it's a thing, right? Any investment class that people are thinking about, they're all talking about how we can fractionalize it.
I love this idea of cars. I've been talking about this. I used to do something called the Asian Blockchain Podcast, and that was back in 2017. And I used to talk about the fractionalization of cars all the time and autonomous driving. And back in 2017, it felt like it wasn't that far away. We're still not there yet.
Yeah.
That was 7 years ago. No?
Well, it's again, like, it was Bill Gates who said, like, we'll overestimate how long, it's one of those things. Friend of mine was in San Fran this weekend and sent me a video of a Waymo, driverless Waymo. Like, that's pretty cool. Like, we're getting close. Yeah. We're getting close. So, it flips the capital markets and it flips our established views on ownership. So it's a big cultural change, I guess, is my view around some of those things.
I think so too. And look, you have an 18-year-old son. I have a 22 or 23-year-old daughter. And I feel like when I was 16 years old, right, I got my driver's license. And I remember asking, even though we were poor, I remember just thinking, like, I wonder if I can get a car. Yeah. Because all my friends had cars and, they were tinkering with the engines and stuff like that. But it was a thing you really wanted. And kids would actually get cars for their birthdays. And kids would ask their parents, can I have a car? Can I borrow your car?
Yeah.
My daughter's never mentioned it even once. Not once.
Yeah.
Yeah. I don't think she'll ever own a car. I don't know. It's weird.
Powerful, right?
Anyway.
That's a big social change. A really big social change. Yeah.
Massive. And to her, I mean, remember, like when I was a kid, I lived in the suburbs. There were no taxis around, but then there were definitely no Ubers, right? So for them, mobility is simple, I think.
Yeah, I agree. Yeah.
Anyway, talk to me about Easy Crypto and like, what is the stuff you see most on the platform? Where do you operate right now? You operate in New Zealand, in Australia, and where else?
And in South Africa. Yeah.
Awesome. Awesome.
Yeah. So we're in three jurisdictions. So we're a business that acts a lot like a foreign exchange broker. So we take in dollars and we issue crypto to the end user. So we don't hold on to it. We're called non-custodial. We send it straight to people's wallets. And if they want to sell it, they can sell it through us and we'll put dollars in their bank account. So, collectively known as an on and off ramp, that sort of stuff. Like the things that are really popular. So our base is traditionally people newer to crypto. We've now got 6-7 years of operating. So there are some long-term customers with us. Bitcoin is still the daddy on the platform, but its role in our volume is slowly diminishing.
Really?
Yeah. So it would have back in 2018 it would have been 70% of volume, and now it's not. It's kind of getting close to 35%. Ethereum's up there. Solana is a very popular platform now, and then. We have in crypto, we have a very long tail. So we offer about 150 assets. That's not, that pales in comparison to some of the exchanges. But, we quickly, outside of maybe the top 15, you're talking about people doing fractions of a percent of volume. It's a real long tail industry for us. Like we do see spikes in interest as memes and or news events happen. So, Ripple at the moment is a business that's got a big pending court case with the SEC. Anytime there's any kind of market moving news on Ripple, we'll see a spike in that volume. That sort of stuff going on. But, over a long enough period, like we still see people gravitate towards the big high cap coins. And, we're a business that want people to do well out of crypto. And so our advice to them is structure their portfolio so that, even in crypto, there's risky assets and there's less risky assets. So we're saying to them, invest wisely, have a think about what your strategy is and, try not to speculate too much.
What do you think about liquidity? Like, how has liquidity changed over the last 2 or 3 years? And I always used to, because you said almost like an FX broker, right? So I always put it in the context of FX. FX trades about $7 trillion a day, something like that. So it's a lot. And the crypto market cap is only around, I'm just looking at coinmarketcap.com. It's around $2 trillion, maybe a little bit more. So what do you think about liquidity and what kind of has to happen? Because there are two things, right? We talked before about making it more mainstream. I mean, everybody trades FX at some level, even if they don't know they're doing it, right? Because if you buy a car from Japan, you've somehow done an FX trade. You just don't know it.
Yeah.
How do you get this thing to be more liquid over time?
So the traditional answer has been to co-opt more retail users in. So, crypto was definitely a movement driven by retail traders to begin with. And probably right up until about maybe 2021, that was the case. And then, we now have Michael Saylor and MicroStrategy and all those kind of guys in our space. So the original plan was to get more users on, more wallets, more people participating and holding and doing that sort of stuff. Under the hood of crypto, it is pretty sophisticated. We have market makers and we have OTC desks. We've got people who are liquidity providers and making money doing that. And so, the structure of the market, I would imagine, looks remarkably similar to the markets you played in, Michael, back when on the trading desks.
Getting closer and closer for sure.
Oh, absolutely. Yeah. So, there are market makers. If you're a new project, you probably have to pay to play to get your liquidity. And so you are engaging a market maker to make sure the spread stays at 1% or whatever the value is that you arrive at. If you're already a successful project, doing very well with millions of people doing it, like the spreads and the liquidity on those things are really, really quite good. And, there hasn't been an instance I can think of in the last 4 years where in the market one coin is choked up just because there's not enough liquidity. That doesn't happen anymore. Like it is just a thing. But new projects, absolutely. You're in the speculative end, and you can be left high and dry trying to trade out.
What are the differences between, or are there differences between the market in New Zealand, the stuff you see there, the way people behave there, Australia, and South Africa feels like it's a completely different animal. Do you know what I mean? And not just from a regulatory standpoint, although I'm very curious about that as well. But I mean, just from a trading standpoint, are there different things that people are doing, or is it starting to kind of revert to the mean and just converge?
No, they definitely have favorite coins, and that's not unique to us. There are coins that run in certain markets. New Zealand, for instance, really likes Cardano. It's one of the older, more established projects.
Yep.
In our book, it consistently trades higher. Whereas South Africa, they have strict capital controls in that market, and so there's a restricted list of tokens that they can access. They pay a premium, and they typically skate towards Bitcoin. Like their Bitcoin dominance is a lot higher. That's what we see on our platform. And in Australia, like Australians' behaviour, like they seem to be much more comfortable trading. Like my observation is their financial literacy is higher. They're a nation that is more familiar with buying and selling assets and doing that in a structured way. And so, we do see we see the activity. So the velocity in the user base is a little higher in Australia. So again, they've got different traits. New Zealand's, like I said, we quite like a property that moves at a slower pace than shares. So I think our literacy is determined by that as well.
What is the impact of all these big banks in the United States coming into the market, right? And having actually ETFs on some of this stuff. And like you said, building indices too.
Yeah. So my view is net, it'll be positive because suddenly you've got sophisticated people who can hedge and have options and do all of that sort of stuff. And that will bring, over time, it'll bring down the volatility. We just have to be a little careful what we ask for because, in my opinion, volatility has a bad name. Volatility can be good and bad. And
particularly if you're an options trader, it can be great, right? Anyway.
Yeah, exactly. Yeah. So I think that will happen over time, and we're seeing that with Bitcoin. Like it's wild rides, as wild as they are not nearly as wild as they were prior 17. Right? It's getting more mature. We're certainly seeing liquidity, and the ETFs and Bitcoin price are definitely correlated. When there's inflows into the ETFs, we're having good days at Bitcoin price, and so they're going to start commanding more and more attention in terms of what they do. And I would imagine. My mental playbook is that when the Fed starts blinking a little bit more and, the Fed fund rate comes down, the yield on bonds and money market funds is going to fall away and people have to go up the risk curve, and we will see more liquidity via these vehicles come into the market. That's kind of what I think will happen. And we won't be the only beneficiary, but the US, the S&P in particular, like that is completely people think Bitcoin is concentrated, but apart from the seven amigos, like has it really been an S&P summer? It's quite interesting. It doesn't look like it's evenly distributed to me, and some really good shares have not shone yet. So I think there's going to be some interesting times ahead when people start chasing better and faster returns as well, right?
Yeah, I mean, look, we can spend hours talking about what actually drives the index price, the indices prices in the United States. And like you said, it's highly concentrated in individual stocks, but because there's such a heavy weighting for the indices, they drive the indices higher by definition.
Yeah.
And the higher they go, the bigger their weighting. They have to then get rebalanced. Like, I don't know how much information most people that are listening have about how indices work.
Yeah.
But fair enough. Yeah. It's not very well distributed. I want to ask you this too. What drives, because you operate in Australia, New Zealand, and in South Africa.
Mm-hmm.
The Aussie New Zealand thing would have made sense to me just because they're right next to each other. I'm not really, but you know what I mean? Close enough to each other. But what drives where you guys operate? Like, why not operate in the United States? Why not operate in Europe? What drives it for you guys?
Well, so our founders are shamelessly Southern Hemisphere focused. So that
Shamelessly.
like they just are, because we felt
I love it.
We felt that crypto, the user base in Europe and the US was really well served. The Coinbase has been around for a very long time. Bitstamp as a European exchange has been around since the dawn of time in crypto. So they had a vehicle to get into our space, whereas kind of below the equator, that wasn't the case. Then look, we're in those countries because they are all ex-English colonies. They share a legal precedent, common law, and that helps. And it certainly helps our understanding around what we can and can't do. And then, there was certainly a little bit of, good fortune in having people or the right people come along. So one of the offices was set up because we had people in New Zealand and they relocated back home to Australia, for instance. That was, they kind of went that way and went, hey, well, why don't we? And it felt right. And the legislation and the regulations were similar enough that we went, yeah, we can do that. Whereas South Africa was deliberate. There's 60 million people in South Africa. There's some of them are desperately poor. That trend around trying to build financial freedom is definitely in that market. And so, we wanted to go into a scale-based market and participate there. So, quite different, quite deliberate in South Africa.
Got it. Can I ask you this? So you talked a little bit about the regulatory environments, right? Do you think at some point they all converge? I mean, not exactly, but at some level, right? Like the trading rules in Japan seem pretty similar now to the trading rules that the SEC has in the United States, and the European Union obviously has converged. Do you see the crypto stuff kind of dropping to the bottom of the funnel? Do you know what I mean? And looking more and more similar over time?
Yeah, look, I do. Honestly, at the moment, the US is the outlier. Like everyone else is converging on it, and at a compliance level, I'm going to get the acronym wrong. Is it FATF? They're the one who issue, guidance for how you do AML and all that sort of stuff. Like that's flowing through globally. So we're all converging at an AML KYC level and that sort of stuff. And then, every nation has its own regulator. Some, the US model is enforcement based, whereas everyone else has a different play. But they are all issuing guidance and rules around how you deal with your customers, what you can list, how you market to your customers. Like everyone's doing the similar sort of stuff. So I think we really are, Michael. It's just because it's happening in every one of these small jurisdictions, it feels really disparate. But and there is regulatory arbitrage. Like there's a reason why you have financial hubs and BVI and because people have been doing that forever as well. So that stuff's going on, and they're just they're marketing themselves as being a little slower on regulation. So that's just kind of how it's playing out.
Can we stop talking about money for a moment?
Yeah,
and talk about identity. So
sure.
In India, I forget what the name of it is, right? But India has been building a decentralized ID system for a while now. They're trying to roll out to the entire population. And the only reason why I mention India, not that it has anything to do with easy crypto per se, is because it's so large, right? 1.2, 1.4 billion people, and they're trying to do this for everybody. And I've been spending a lot of time over the past, 7 years thinking about self-sovereign identity, right? Like, why don't I own all the stuff you're smiling at me, but don't you think about it? Like, I want to own all the stuff that's mine.
No,
and I want to own it, and I want to be in charge of it. Sorry, go ahead.
No, sorry, I'm smiling because it's very rare that people actually understand what self-sovereign is. So, well done, you. If you believe that we're entering into this kind of new way of beyond the industrial, we're in the digital revolution. how we interact with the world is really, really important, and knowing who we're interacting with is really, really important as well, right? So having control of your identity and moving from being the product to, which is, kind of where we're at now with Facebook and Google, to being in control of how our stuff is syndicated, what's ours, how you provably say that's yours, like that's a really big step, and it will be a really important step. And my personal view is some of the cryptography that we use all the time in crypto can go a long way to doing that sort of stuff. So we can do zero, it's quite technical, but the ability for
zero knowledge proof.
Yeah, exactly. The ability for me to say that's okay without me exposing all of my identity to you, Michael, I think is a really powerful thing, and will go a long way.
So do I. Completely.
And if you, there's this triangle going on at the moment, and we talk a lot about AI. Prior to that, the bubble was metaverses, and prior to that, the bubble was crypto, right? And in my view, they're semi-linked, because AI is going to be generating the artifacts that live in the metaverses, and crypto is going to be the thing that's being used to pay for it. And how we manage all of that is going to be using wallets and signing technology and all that sort of stuff. And whether it's the generation of cryptography I use or something different, I just think they're really linked. And we're not ready, because we're already seeing deep fakes all over the web for various elections. Or India was just going through an election; it was rampant over there. So having the ability to control that stuff and really trust what you're reading and the source of what you're reading, that'd be pivotal to us as a people. I think it's so big that I don't think we can get our head around it.
It's actually the thing that I'm most passionate about. This idea of self-sovereign identity is more important to me than the trading of crypto, more important to me than all this other stuff, is this idea of, in the physical world, at least up until now, you couldn't get a driver's license, a marriage license, you couldn't go to a hospital without proving who you were. You needed a birth certificate or some way to identify yourself. But online, you could be 1,000 different people. And people will make the argument, right, that, yeah, but if you don't know who I am online, right, then I can get a job because you don't know that I'm in Vietnam as opposed to in Silicon Valley. So that there's some, balance there between anonymity and what I get paid. And that's just one example. But at the end of the day, I should know who you are at some level, at least enough so that I understand zero knowledge proof. So I've done some work on that as well. But I should be able to trust that you are who you say you are, I guess, is maybe the more important thing, if that makes sense.
Yeah. And you and I are going to agree wholeheartedly on that, because without that degree of trust, what are we? How do we interact?
Nothing.
And the whole digital ecosystem has to have a level of trust on it. And if we can't, then we're going to go back to meeting face to face. So it breaks.
Yeah.
That's the worst case. And so, I think it is a really big part of the, and again, I'm really not precious if it's using the cryptography I use, but I do think self-sovereign identity, zero knowledge is just part of the equation. And there's lots of governments, New Zealand's doing it as well. We're redoing our digital rights as a nation, but they're written for a world that was 5 years ago already.
Right.
And that's the bit that's shockingly scary for me, as, someone who operates in this space. So.
Yeah. And look, we can spend another hour or two talking about whether government officials and the bureaucrats actually understand the stuff that they're legislating. But I think that that's true for most technological change. So let's not go down that rabbit hole, right? Because otherwise you'd be in the government and they'd just be mucking around outside.
Yeah.
Talk to me about Celsius. Look, I was reading some of the stuff that you were writing, right? Because this is one of the things that I do. I'm nothing if not curious. And if I find somebody that I think is smart, I just read through the stuff that they write to think about, what is the stuff that I need to know? I met Alex Mashinsky.
Okay.
I did. I met him face to face. I talked to him. I was at a crypto conference in 2018, I want to say, in France. I was at Paris Blockchain Week.
Oh, yeah.
And I was actually moderating a panel. I was moderating the penultimate panel there I had somebody from Belgium or somebody from Brussels on the panel. It was a really great panel. And the head of something in France. And we had 300 people in the room. But in one of the breakout rooms, Alex Mashinsky was there. And I'm like, who's this guy? Because if you've met him, he's big.
Right.
He's got a big personality. He's very charismatic. And he'd done a lot of great things before, according to him. So I'm just curious, do you know what I mean?
Yeah.
He seemed kind of like a little bit of a huckster when I met him.
Well, it turns out
What's going on here with Celsius?
Yeah, it turned out he might have been, right? So,
Yeah.
I guess for your audience, so Celsius was a crypto bank effectively. So people were depositing their crypto in Celsius and getting loans back. And they went bankrupt, and they were affected by FTX and all sorts of things. But last week we started seeing news that they were suing their former customers who had withdrawn their funds prior to their bankruptcy because they we don't, like, you can see it's kind of, excuse my French, but batshit crazy.
It's my money. I'm taking it. Like, I don't understand what the problem is.
We took our funds out because it was our money, but we're suing you because you took your funds out and that caused a run on our bank and caused our bankruptcy. But not only that, the prices back when that happened were probably down maybe, 150%. But they want today's value back. They want people to repay their funds back in today's value. So it just seems so ludicrous that it's really hard to give it credence. But it's people are posting about it all the time, like it's real. So it doesn't make a lot of sense, and it smacks of desperation, I guess, that they've missed out on this bull run, and they're trying to recoup somehow for some bad actions, right?
Yeah, I think Mashinsky's just afraid of going to jail, like Bankman-Fried. Anyway, it's always interesting to end on something funny. Unless there's something else that I missed or something else that you wanted to point out, like about Easy Crypto, maybe the best way for people to find you or find out more about you or find out about the business, where can they contact you? Yeah,
well, look, we're just at easycrypto.com. It's all. It's pretty easy to find. And if you want in one of our countries, you'll be automatically directed to our local website. So please don't come on board. If you sign up, you'll get access to the newsletter that Michael was referring to. And we just want to make your journey into crypto as painless as possible and get you into this disruptive technology that we think is going to make a change. So thank you very much for having me, Michael. Really appreciate it.
Thank you. Paul Quickenden, the Chief Commercial Officer of Easy Crypto. Thank you so much for doing this. I can't believe you guys were actually able to buy easycrypto.com. So good for you. It makes it so much easier, no pun intended.
That's all right. There's nothing like Kiwi ingenuity in action, Michael. Don't you worry.
I love it.
Thank you.